Okay, it's 4 o'clock, so it's time to start. Welcome, everybody, those of you who are here at the table, and those of you who are listening in or watching wherever you happen to be in the world. Marianne, Nessén, and myself will discuss monetary policy, and I'll, of course, talk about yesterday's monetary policy decision. But in addition to that, we're actually going to talk. We're going to talk about three different things. In addition to that, we'll say a few words about macroprudential policy, our inflation forecast, and also talk a little bit about forward guidance and how one can relate our way of doing monetary policy to the presently ongoing debate about forward guidance. So when it comes to monetary policy, the decision yesterday not to change the policy rate was basically taking note of the fact that when we sat here in July and reflected on where we are heading in this economy and elsewhere, we concluded that things will gradually improve over time, and we concluded the same thing this time. This is actually one of the few times when at least during my time dealing with these issues, when it comes to the internal preparatory work, in a few instances, we actually had to change the various axes in the graph so that it would be clearer where the differences are, and that's because there are not many changes from the projections that we made in July. So basically, the picture stays, and that makes it reasonable. At least that's what we think, to keep the interest rate, the policy rate, at 1% and keep it at 1% towards the end of next year. And then after that, and by then, if we are right when it comes to our views on the economy, by then actually the inflation rate will already have started gradually rising, and that means that by slowly increasing the policy rate, then after that we will gradually move towards 2%, our 2% target. Now, looking at where we are when it comes to all these things, of course, given the nature of this economy, with the exports or imports being very, very large relative to GDP, the global recovery is, of course, very, very important. And there are many different parts to it. Most important, probably, at least in the short run, is what happens in the euro area, and they are moving into positive territory when it comes to growth on their side, and that's, of course, a very, very good thing, and that's likely to affect us in a very positive way over time. At the other end here, particularly on this graph, we have the U.S. economy, and they've been struggling with their debt overhang by now for many years, and things have improved, and not the least, the household sector has delevered substantially over time. And that means that on the one hand, that there are, as always, some unresolved issues, debt ceilings and other things, but sort of on average, things are improving in the U.S., and that's also going to produce higher growth over time there. And then the KICS graph, the trade-weighted graph, shows that this is what we think is going to happen in those parts of the world that matter most to us. At the same time, which doesn't show up on this graph, is that, as all of you know, there is an element of rebalancing going on presently in the world economy, and that presents itself particularly in the form of depreciating exchange rates in a number of countries. What will eventually come out of that is hard to tell, and it hasn't really affected things that much when it comes to the net result of all of these things when it comes to global growth. And for that reason, on the one hand, you have the rebalancing going on in one form or the other. Too early to tell what the end result will be. While on the other hand, when you add everything up, things haven't changed actually all that much when it comes to the global picture and the global economy. And this, of course, has implications for the Swedish economy, and we think that we'll gradually see stronger growth going forward. And our growth projection hasn't really changed that much at all. And this is despite the fact that the second quarter numbers were much lower than we and probably many others expected. But nonetheless, going forward, we do think that growth will pick up again, and that means that for this year, our growth number is 1.2. Next year, it's 2.7, and 2015 it's 3.6, and that's a trajectory which isn't that different compared to what many others dealing with projections have suggested. This, of course, also means then that we'll have a more positive outlook when it comes to the labor market. It was a positive thing all in itself that we were wrong on unemployment when it comes to the latest numbers. We still think that this is going to be a little bit on the slow side before it takes hold, and we'll see the turnaround, particularly in the course of next year. So here we are a bit. I don't know what to call it, conservative in terms of how soon we will actually see results from increases in aggregate demand, being that domestically or what comes from abroad. And then, of course, when the labor market situation improves, that also means that it's quite likely that then wage increases will follow from that. And in addition to that, when aggregate demand picks up globally and domestically, that means that there will be more price pressure in the system as a whole, and it will also be easier actually for the companies to pass on price increases to consumers. And all in all, what that implies is, of course, that we'll see gradually rising inflation. And that means that given that we are where we are when it comes to this conjuncture, inflation will gradually move up, and eventually we'll in the course of 2015 we'll get to our inflation target of 2%. And given our construction of the CPI, that as always means that we'll have an element of overshooting when it comes to including interest rate hikes in the consumer price index. All of this is also going on and happening against the backdrop of continued high debt in the household sector. The debt level, actually, according to our projection, is sort of slowly creeping up, and this is not going to change overnight. So this is also something that has mattered to us and something that we need to keep a close eye on, and this is something that we and many others have to live with and deal with as best as we can over time in the Swedish economy. But all in all, the repo rate remains low. As far as we can judge, we're talking about interest rate increases towards the end of next year, and holding the repo rate at this level will help when it comes to aggregate demand. And that also means that it will be a little bit easier compared to doing something else to make sure that the upturn takes hold, so to speak. And that's also why it will take a while before we get to a point where the policy rate will slowly start increasing. Now, so much about the big picture and yesterday's decision in terms of the policy rate and the interest rate path. Now let me say a few things about macroprudential policy, and which is a hot topic here presently. First of all, we think that it's very important and it's a good thing that now the government has indicated how it wants to handle these issues, so that we end up with a clearer responsibility for macroprudential policy, because it's good, generally speaking, regardless of what kind of decision making we are talking about, if you can understand who is supposed to decide what, when, and why. And that's a good thing. That's a good thing in itself, that we sort out these issues. There's a lot of technical work that remains to be done, and there are also sort of formal elements to the technical work, because so far what we know is a kind of directional view, if I call it that, but eventually draft bills will have to be written, and government decisions will have to be put together, and then also these various bodies and decision-making entities actually de facto have to be formed, and they have to start doing their work. In terms of what we are doing or supposed to be doing in this, our tasks remain unchanged, and if you are in central banking, as we are, then you deal with the monetary policy and you deal with financial stability one way or the other. So clearly, what will be decided or not decided in the future will continue to matter to us, and we will be deeply involved in these issues, and we will make our voice heard as part of the decision-making process that we now know a little bit more about. We do think that it's a good thing that some of the measures that we and others have talked about for some time also have been announced, and that's a direction when it comes to this topic, which is good. And then, of course, the proof of the pudding is in the eating, so eventually things also will have to be decided. And once all of this is implemented, and once all of the coordination and all the conversations that are expected to take place actually also take place, we do think that this will also sort of form the debate and the views about how you actually do these things, and how it will also relate in one way or the other to monetary policy. But for this particular decision, and when we have discussed this issue at this juncture, I can't say that this has had sort of a major impact on our way of thinking about monetary policy, because this is more for the future, and something that we need to factor into our equations once we actually see clearer what has been decided, and to what extent we get an effect or don't get an effect when it comes to the general debt level in the household sector. These things you don't turn around overnight. So regardless of what is being decided, household debt is going to stay on the high side for the foreseeable future. And that means that that's something that we need to keep an eye on one way or the other. So that was the first agenda item. Now Marianne will take care of the second one, the Riksbank's inflation forecast.
Exactly. A few slides on the inflation forecast, or the evaluation of our inflation forecast. Then just very short about forward guidance, and after that we'll sort of open up the floor for your questions and your comments. So there's been a lot of discussion about the Riksbank's inflation forecasts recently, and there have been some evaluations, and this is of course very, very welcome that we have proper evaluation of our forecasts, not just inflation forecasts but all our forecasts. We regularly make these forecast evaluations. So once per year we produce a report which is called Account of Monetary Policy, in Swedish, Redogörelse för penningpolitiken. I'm going to talk a little bit about this today. But it's very welcome that we are scrutinized by others, and when we like to sometimes we like to react and comment on others' comments on us. So more specifically, recently there was a report from the National Institute of Economic Research that went through our inflation forecasts, and their result was that on average the Riksbank has overestimated inflation, whereas they had not. And I would claim that this is not a new result. You will find it in the Account for Monetary Policy. I'll come back to that. But I think it's really important that we look look at the data and understand what's going on behind this result. I also think that we need to look very closely at what happened last year, 2012, and not look at the long run average too much. I think it's important that we keep in mind what happened last year as well. So let's start by looking at the data. So we've overestimated inflation. So this graph shows it's the CPIF. It's from 2007 onwards. We started making forecasts in 2008 of CPIF, and the blue dotted lines are our CPIF inflation forecasts. Now, if you look at this figure, it's messy, but from up until about 2011, our forecasts were pretty okay. Sometimes the forecasts were above, sometimes they were below, but on average, it was pretty fair forecasts. But we missed the low inflation in 2012. Those forecasts, those blue lines, are way above the red line. And this was indeed a theme of this account of monetary policy, where we went through this in quite some detail. So we overestimated inflation in 2012, but how about others? Well, if you, to this graph, add the forecast made by the National Institute, the yellow lines, you will see that they also overestimated inflation in 2012. Now coming back to their result, that on average they have not overestimated inflation over the longer period. How does that come about? Well, it's because they underestimated inflation quite substantially, 2009, 10, and 11. So those two, that cancels out in this measure of average errors. So what I said that we found these results earlier, and so I'm going to show you a graph from this report. This is figure 4.7 in that report, and the blue bars are exactly the average errors, and there you will see that the bar for the National Institute, here called KI, Konjunkturinstitutet, is indeed smaller than the blue bar for the Riksbank. But again, it's probably important to look at other statistical measures when you make an overall evaluation of forecasting performance. And in the business, it's very common to look at squared errors here. So the red bars are the mean squared errors, and if you look at those, you will see that our forecasts hold up well. So a different picture emerges if you look at these mean squared errors and take into consideration that others have been below the inflation as well. So we think it's a good idea. It's very important that our forecasts are scrutinized by others. But our inflation forecasts, we believe, hold up well. And we have this report, and also there's an economic commentary written earlier this year by Mikael Andersson and Stefan that go through this their report is much shorter than this account of monetary policy, which perhaps is a bit long. But above all, as I showed you, it was in 2012 that the Riksbank and others overestimated inflation. And if you look at the corresponding graph, this one here was for the whole period. It's from 2007 and onwards. If you look at that graph for only 2012, you will see that all the blue bars are very, very large and all on the one side. They go off this graph, which just goes to show that 2012 everyone missed the low inflation. We went through that in quite some detail in this report, and that was input into the revision of the inflation forecast that we made in April. So we adjusted our inflation forecast, and also the executive board lowered the repo rate forecast in response to this. So that was a few slides on evaluations of our inflation forecast and the policy implications of that. Then just a few words on forward guidance, because that's a very topical issue. And I'm sure you know this very, very well, that an increasing number of central banks have have begun to provide forward guidance. We like to say that we've been in this business for very, very long. We've had our variant of forward guidance since 2007. Other central banks have done so also for a very long time. The Norwegian and the New Zealand central banks have been providing interest rate forecasts for a very long time. So that's how we talk about the future, by showing the interest rate forecast, and also by using these alternative scenarios to show how the interest rate, how monetary policy can respond if and when economic conditions change. Now, recently, since some central banks have specified threshold values in terms of unemployment and also in terms of other variables, there's been a there's been a debate about whether this is also appropriate for the Riksbank. But here it's really important to remember that these are only threshold values that are used in the central bank's communication. And it doesn't mean that unemployment is a goal or a target. And indeed, if you look at the Bank of England and their mandate, it's very similar to ours. So it's more of a communication device. And our way of communicating is with the interest rate path. So to you.
That's the long repo rate continues to support the economic upturn, and this path, the way we look at it, is likely to stay this way until towards the end of next year, and by that time things have improved domestically in Europe and in the rest of the world. So let's hope we're right. Questions, reflections, thoughts, ideas about this?
Yes, you said that there are several indicators.
The conference has been unmuted.
Okay, no problem. There are many better signs in the global economy, and as you yourself notice, Swedish labor market, for example, has improved. Despite this, the repo rate trajectory is more or less left unchanged if you, apart from a small cosmetic change in the short end. But how come that that this doesn't affect the repo rate if you now observe that the Swedish labor market has turned better? Shouldn't that reflect in the repo rate?
No, it hasn't improved enough for that to produce a change, and particularly when we look at the rest of the world and compare to our discussions about these issues in July, there isn't enough of a change in order to come up with a conclusion that would have been different compared to what we have here. We do think, though, that as you saw on the graph, that the labor market will improve, but that's more towards next year, and it will happen gradually.
Okay, so it's
just let me remind ourselves that all of this also happens against the backdrop of inflation, which is low.
But then I'd interpreted that as you have like thresholds that unemployment must change really much. Then you could revise your repo rate trajectory. But can't the repo rate, of course, you could shift it gradually.
Not thresholds in the sense that you could argue that when it comes to all the projections that we make and all the variables that you look at, you would have sort of a set of thresholds, a set of numbers, and then you say that if we have passed those numbers, then things will have to change. But that's not how decision making operates. I mean, we have a very large, very competent staff working for us, coming with their views and reflections on what's going on, and then among the six of us we discuss and settle on these projections. And we can have all sorts of views when it comes to, let's say, the interest rate policy decision and the repo rate path, but I also think it's important in itself to take note of the fact that there are no divergences of views among the board members when it comes to the growth numbers and labor market projections and these other things. Because ultimately, it's not only a strictly technical exercise coming up with this. This is also something that the executive board members decide, and as part of that conversation, this is what we have settled on.
I mean, the big picture is much the same as in July, and that includes the labor market. That it'll take time before we see a substantial improvement there. But again, the executive board doesn't look at a single indicator of, for example, the real economic activity. It's assessment across a broad set of variables.
But I guess also that, as Stefan said, you're a little bit conservative because you're a little bit uncertain regarding the latest labor force surveys, I guess, summer surveys.
Yeah, that's correct.
And you
sure.
want to have more data.
Well, we know that the summer figures can be a bit extra volatile. But again, these are pretty small revisions to our unemployment forecasts. I mean, the big improvement doesn't come until in about, well, I guess it's about a year's time or so.
And that also implies to hours worked that it might be uncertain.
Of course. I mean, that figure has been quite volatile recently, but yeah, that can change too.
A small detail question, if it's okay.
Sure. That's what we're here.
Yeah. Previously, you said that NAIRI or some kind of steady state unemployment is roughly 6.25. But then I remember you hiked it a bit. You said that after the latest demographic survey, you said that it was 2 or 3 tenths higher, perhaps. So is it still in the interval, you could say, 6.25 to 6.5?
Well, okay. First of all, from a policy point of view, I mean, we do have a range for this difficult concept of long run, perhaps equilibrium unemployment, and you know that interval is very wide to reflect the enormous uncertainty we have here.
But what became a bit uncertain where the mid-range is now.
But when we start counting stuff, when we put numbers into our models, we can't put in a large range. Yeah. So it used to be the 6.25. That was revised upwards a little bit now recently. We haven't changed that this time. No. But I think
so now it's we'll 6.4.
We don't have that kind of exactly number.
Okay.
So you can't take it like that.
A bit higher than 6.25.
Yeah. But this is why we have the range, because these things we need to reassess our outlook for the long-term outlook for unemployment now and then also.
A question regarding brighter outlook in the global economy. We have also seen recently in August and here in beginning of September global bond yields has surged, it's going up. How do you interpret the uptick in yields, which have been quite
It's of course very, very hard to fully pass judgment on what is going on. But a very sort of simple view is to say that, well, we're talking about these things now 5 years after Lehman. In most other cases, when you look at these episodes, after 5 years you're out of it. We aren't fully out of it as of yet, because for a whole host of different reasons it has taken a long time, and it has sort of gradually moved from one country to another, so it's not over yet, and Europe ended up being behind the US when it comes to engineering a turnaround. But in that environment, eventually of course things will normalize. When that actually will happen, hard to tell. We have made our projection with our interest rate path. But things have changed in the sense that things have moved on, because it used to be that the message was that this will take a long time. And that was kind of the end of the story. Now things have moved on in the sense that we have a conversation about this thing is actually going to happen. Not so sure when, but gradually it will come. It will be different in different parts of the world, but it will come. And then market participants, for various reasons, and you are closer to the markets than I, and react to that, and that is what seems to have happened. Because I alluded to what's going on in Turkey, India, Indonesia, and Brazil earlier, and in terms of things moving around, now I'm talking about exchange rate, that wasn't there when we talked about these things in June. But then people decided over the summer that maybe something has changed after all, and then capital flows have started moving in a different direction, and that means that there is an element, presently there is an element of rebalancing in the global economy. But it's not that easy, and it's non-trivial to figure out what to make of it. And I think it's even harder to figure out what to make of it from a Swedish perspective. What makes it a little bit easier this time for us is that the countries that now are dealing with these exchange rate movements aren't major trading partners of ours. So that means that you probably can have substantial exchange rate movements on those in those parts of the world without that affecting us a lot. But clearly, I mean, there are things going on. There are things going on all the time, and still, I mean, this is the best judgment that we have made.
Do you also think that's a factor behind that the Swedish krona is even weakened somewhat, particularly versus the euro?
It's hard to tell. It's of course always hard to tell when it comes to the exchange rate, but if you look at our projection, basically we say that the krona should roughly stay where it is, or maybe get slightly stronger. What is though worth noting is that we haven't had very large exchange rate movements actually at all in the course of this summer, while all these other things have been going on, and I think that's probably because our macro fundamentals are not a problem, and that's why we have had more stability, which probably is a good thing in itself.
You said that the measures that has been announced by the government regarding macroprudential is positive. I know that the executive board has discussed household debt, for example, for a long time. Which of these measures do you think can affect household debt on the downside, or house prices?
I wouldn't want to sort of rate them or grade them presently, because in the end we probably need to do several different things in order to get a better handle on this. It's rare that you say that there is one and only one thing that you need to do, and then you deal with that particular problem. So it's more a kind of a baskets of things that need to be done in one way or the other. We have earlier talked about amortizations. We have talked about risk weights, and we have talked about the level of capital in the banks. Time will tell eventually what will come out of this, and what will be suggested. And as I said, and in other fora, I had talked about debt dominance, in the sense that if you end up with too much debt one way or the other in parts of the economy, being it government debt, corporate sector debt, or household debt, then it usually takes quite a long time to deal with those issues. And if you look at, for example, the deleveraging process in the US and how long it has taken for the household sector there to reduce their debt, you just don't change these things, and you just don't engineer a turnaround overnight. So it will just take time. But of course, it would be, in my view, highly desirable if household debt does not continue to increase.
Because personally, I must admit that I've not really understood what has happened with the decision to let the SFSA have the responsibility, since in a way you could say that they've always had their responsibility, since they were the ones introducing the LTV ceiling for a house, or the risk weights, the floor for risk weights.
That's correct. That's
so
one way.
In a way, the government announced that in the future, the macroprudential will be run as we've always done, that is, SFSA and the government. Or would you say that something dramatic has happened since the?
It's clearer. It will be clearer in the future that this thing that we call macroprudential is a sort of a topic or a field in itself. And that also comes from the work that is going on in Europe, because what we have not discussed here at all, because this has all lately been discussed mostly from a very national perspective, is that in the future the European Systemic Risk Board, which is an institution which isn't that well known, is producing a list of macroprudential instruments, and then countries are expected to use those macroprudential instruments. And when you do so, you are also expected in the future actually to notify the ESRB, which will opine on what you are doing. At the same time, we will create this stability board or authority or whatever it will be called in the future, and that's a way of formalizing the conversation that has been going in the past as well. And that's also probably a very good thing in itself, because that puts more that brings more clarity as to who is supposed to decide what, when, and why. And as part of the decision-making process, you also bring clarity to who is supposed to opine on what is to be decided. And I think that that's a very, very good thing and a positive development all in itself. And let me give you one example why. We have taken a look at a few years back at the issue of what went wrong in the Baltic countries. And when you look at the paper flow and who argued back and forth and who said what and why they said certain things, in our stability report, for example, we talk about this numerous times. But basically nothing happened.
No.
And there isn't that much of a record trail. And that's not a good thing. It's better if you actually can find this in the papers, and if it's also better if somebody actually eventually is held accountable, because that should bring more clarity to what is supposed to happen in this country, in this field.
Yeah. But for example, the Baltic countries, of course, I guess that there could have been several measures that the government and the SFSA could have introduced back then.
No, you are correct.
What you say, the reason why you are positive is that the international development is that we more and more accept macroprudential policy, but the decision in itself to give the responsibility to SFSA, that's really nothing new.
No, that's nothing. That's nothing new, because since forever, I was going to say, the FSA has dealt with the capital charges. Just to pick one.
Exactly.
Pick one example, and a whole bunch of other things. So another way of reflecting on this is to say, in very, very general terms, that given that there will be more formality brought to bear on this, it will probably be harder in the future to do nothing.
Yes. Okay.
Yeah. Two questions. Just one to follow up on your first topic on financial stability matters. You mentioned that it has not been a major impact for this particular decision, or yesterday's decision. Now, when I heard that, I said, okay, then it had an impact. You see, the government's announcement of the...
Okay, sure, okay, fine. Let me be clear. We're talking about two different things here, because one is the debate about the debt level, which has been going on by now for years. That has had an impact. That is something that matters.
Yeah, but the government's decision...
But then the government's decision hasn't really added anything in particular at this decision-making point. And the reason for that is that there isn't that much substance in it as of yet. It's a good thing because it's directional, saying that we're going to do the following things. But they haven't been done yet.
Good. My second question is more to Marianne, I suppose. It's on forward guidance. And I thought, is there even a discussion or assessments within the Riksbank, evaluation about your current forward guidance? I mean, is it a working task perhaps on could we do better, or is it optimal as it is? Or?
Sure. I mean, we do discuss these things. We take note of what's going on in the central banking community and ask ourselves if we could do things better. We've published our interest rate forecast since 2007, and that's been a very, very turbulent period. So we are aware of the fact that if you make formal forecast evaluations of our interest rate paths, it doesn't come out very well, particularly not in the long end. But it's been a very turbulent period, and perhaps it'll be better in the years to come when things are more normal, as we hopefully go back to some kind of new normal, perhaps. But I guess our way of communicating is very, very general. So we provide forecasts, interest rates, inflation, and all those other variables that come into the, and perhaps I'm just speculating now. Other central banks see a need for being more specific and telling the market you should look at that number at that point in time. Now, so let's see what happens with the central banks. I think some of them are finding it a bit difficult because when they say that they will raise or not raise interest rates until something has happened in the labor market, for example, or when the outlook for inflation is in some particular form, the question immediately arises: whose assessment? Is it the central bank's assessment of unemployment, or is it the market's assessment of unemployment, or is it the central bank's assessment of inflation, or the market's assessment of inflation? So for them, it's a lot of learning by doing. We've learned a lot in these past 6 years with our interest rate forecasts. We've been pretty good with the short term. But the long-term interest rate forecasts have not been good. But again, it's been a very, very turbulent period. And suggestions from you, of course, are always welcome. But there are no immediate plans to change anything. But we are following what's happening in the other central banks. And there's an enormous amount of interest from the other central banks regarding our experiences. And we're going to Basel in the weekend now, and it's going to be a topic now. The other central banks want to know what our experience with our type of forward guidance is.
But another way of putting it, and this is really speaking for myself, is that I have never felt sort of uncomfortable with the system that we use. And actually the other way around, because it's or maybe I've been doing the same thing for a long time now, I don't know, but it's because it's organized and put together in such a way that it makes it easier to tell a reasonable story about the future, which is comprehensive, and where the different pieces fit together. And in that sense, it seems to work. Then we can always have different views about the future and argue back and forth about that. There is one element. This is a kind of a highly technical remark, and that is that sometimes it has kind of fallen by the wayside when the issue of technically how we actually do monetary policy. What really happens, and what happens is that presently we withdraw around, I think it's roughly 35 billion from the system overnight. So when we implement monetary policy, what we actually do is that we withdraw a tiny amount of money relative to the size of the economy from the financial sector, and it's only the overnight rate. And now to expect that 100% has a complete and fully deterministic effect of interest rates several years out along the yield curve, that one shouldn't really expect. So, but it's hard sometimes to, it sort of falls by the wayside the fact that we also produce the fan charts. And the fan charts, they tell a very, very reasonable story about how uncertainty increases the further into the future you look. So if you go, let's say, beyond 1 year, just for the sake of the argument, it's not surprising actually that you end up with all sorts of views about rates in the future, because there is if you only set the overnight rate, if that's the only thing that you do, then there is a limit to what you can do.
Just, I have just
add something, because in a sense, what the other central banks have done is sort of established simple rules in order to communicate with the public. And simple rules are very good because they're simple. But they have a problem because they're simple. Because when things change, they will have to change their simple rules. So in that sense, I think our way of communicating is we can adapt more to changing conditions, perhaps. Okay.
But let me be very, very precise. We talk about these things in our context, and they do it in their context, and that means that sometimes central banks are just basically end up doing different things, and all of us are happy with what we're doing.
I just had a tiny proposal for improvement. Because today, this morning, it was a bit busy for us. I'm from Nordea, by the way. Where you publish the rate forecast, it's only with one decimal. I probably discussed this before in the press release, right? But then you could load the data, but it's quite a problem actually. But it takes 1 or 2 minutes to have it, and it's quite turbulent. I don't know if it's the same for you. And I think if now when you have 2 digits or actually 3 values, I suppose, on the repo rate, I think you should also actually stand for that and publish it in the press release directly. Or you just decide we just do with 1 decimal, because it's quite messy in the markets for that.
Okay, we'll have to look into that. Yeah.
Just a comment. What do you think about the? Do you see any connection with these forecast arrows concerning the repo rate at the longer horizon and the bias that you have in your inflation forecasts?
Now, when I went through this chart, it was the CPIF inflation forecast, and if I did the same for the CPI, those would be contaminated by by our forecast errors when it comes to the repo rate. So.
Yeah, but if you look at the CPIF, the forecast errors there, the bias in that type of forecast on the longer horizons, the sort of relationship to your forecast errors of the repo rate. So your assessment on the inflation forecast, does this affect your repo rate?
Well, I guess you have a point in the fact that all these things are part of one system, and if we're wrong with the interest rate, we should be wrong with other variables, but as well. My point here was just to note that we don't make worse forecasts than others, I guess. But it's.
Because I think, because I'm from the National Institute, because I think it could be a problem if just sort of isolating 1 year like 2012, because if you have these sort of systematic failures, either if you start in 2001 or 2005 or 2008, and you get these sort of systematic whenever you start and evaluating. So if you just sort of make an effort on 1 year, like 2012, which is interesting in itself, you may miss some structural mechanism, structural error that sort of comes out in the longer period. Despite the fact that we have sort of data problems and definitions problems, there's sort of the broad picture. You might miss the broad picture if you just look at the effort in 1 year. So that's what sort of I would propose to look at a first longer horizons, the 24-month, which we think is important, and also look at the fixed horizon, because in our and in your evaluations we have this kind of mixed horizon. We have mixed one within year and 1 year forecast and so on. So we have sort of fixed horizon, I think it is. Of course, you have to look at the sort of current period and current problems and current shocks, but I think it's good also to have this sort of long period assessment as well, despite the fact that you sort of have some problems with definitions and so.
No, my point is the reason why I wanted to talk about 2012 was just to point out that we looked at this in quite some detail, and it had an impact on our forecasts. We made revisions in our inflation forecast during the spring against the background of the forecasting errors that we made in 2012. So we have adjusted our forecast. We have adjusted indeed the policy in some sense.
Were there any particular factors behind these forecast errors in CPIF forecasts in 2012?
The big picture is that no one anticipated the downturn in the euro area We saw the first signs in 2010, I guess. Or early 2011, but we and many others missed the downturn in the euro area, and that's one of the major explanations, and that's something we talk about in the report.
We also discussed the pass-through. It could be the same thing, of course, but we have discussed the pass-through from costs to prices that we've been what do you say?
Too optimistic, or
overestimate?
Yeah, we have maybe overestimated the pass-through. So that's something, and that's of course something that's very hard to do forecast on, and also to think about the future. If we have seen like labor costs, unit labor costs increasing about 2% or about 2%, but still we have not seen inflation going up. So, and then when we see demand picking up, then eventually probably prices will pick up. And this is very hard to do forecast on. And if you've been doing this a time, we have seen many examples when inflation has picked up very fast. Just look at Norway, for example, and that we have not expected. So we were surprised of the low inflation in 2012, and of course it's very hard to say how fast inflation will pick up going forward.
But Stefan, you mentioned that during the forecast period, the Riksbank now expects some passing through later on here as the household demand, aggregate demand increase. When in time do you think it will be more?
Yeah, I mean, that's exactly the issue that we're talking about here, because eventually, I mean, prices will go up if aggregate demand goes up. The hard part of it is to figure out, okay, when is that going to come?
But nothing dramatic.
But nothing dramatic. And if you look at the inflation forecast here, it's a fairly slow movement up towards 2%, and we're talking about 2% in 2015. So it's most likely not going to happen tomorrow.
The question connected to that is household demand. How do you interpret the disposable income now for the household sector? I mean, the labor market improves, and was a question here: how much of the fiscal policy reforms you are expecting in coming years will be directly to the household and improves their disposable income? And how do you see the saving ratio also in this period? How much will they consume and how much will they save? And that is a very important factor if you're going to interpret domestic demand and perhaps pass through to the CPI level.
Can I just start, and then perhaps Christina, you can fill in. Well, when it comes to fiscal policy, we have the same assumption now in September as we did in July when it comes to what do you call it, discretionary fiscal policy.
Yes, overall the 30 billion. Yes,
yeah,
but
right.
How much to the household sector?
And we assume that much of it goes to the household sector in various forms. So that's one factor, sort of boosting that in the near term. But Christina, would you like to add anything there?
Yeah, well, your question about the saving ratio, it's the saving ratio is pretty high, and we expected to more or less stay this on the level it is, but to decrease a bit going forward. But of course, you have like room here for consumption to increase faster if households will actually decrease their saving ratio if they don't amortize, maybe. Using this, you can.
But you're a little bit conservative here.
Yeah, we're a bit conservative, but we have a pretty high growth in household consumption, and going back, we have. I mean, household consumption have not picked up as fast as you often have made forecast for. But when you look at saving ratios and so we're cautious.
Okay. Thanks a lot for coming. Good questions, reflections. This is how we look at things now, and 2 months from now we'll be back. So, thanks a lot.